following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Robert in New Jersey. Hey, Robert, what's going on?
Hey, Tom. A great show.
Thank you so much.
For years. You got a great thing. I've been listening to you for over a decade. That's amazing. You've done a great job.
I appreciate it, man. Appreciate you growling and prowling out here with us.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night. Great to be back with you, too, folks. Almost everything is more complicated than it seems, but nothing is hopeless. Market-wise, let's take a look at it out here. We have the Dow Industrials down 11, Nasdaq's up 17, S&Ps are up 250, gold contract up $9.40, traded at $1,231 an ounce. Silver flat at $15.24 an ounce. Platinum up down $4 at $9.34 an ounce. We get bonds. Bonds are screaming this morning, folks. This is a trip just in general. Bonds, 10-year note, couldn't hold price. 30-year bond couldn't hold price. Right now, the 30 was up 2 full points. It's down 0.6 of 1 point right now. Big move. Both the 10 and the 30 went into their highs, had lighter volume, rejected price. What does that set up? That sets up the B to C of this ABC structure, and the way down is not only a game, folks. This market wants higher price right now. King dollar. King dollar down 10 ticks, trading out at 97.47. The euro is at 110, and the yen is trading at 111.74. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. Deviance, man, it's a beautiful thing. So check it out. So the SPY right now is up 44 cents. Well, first, here, we're going to go first back to the swing point, because it's all about swings where markets talk, walk, and squawk. So when you go back to the swing we're going to take here is from the 22nd of February. 22nd of February, we do 103 million shares. You get to a price point out here of the 194.95. It had taken out the swing of February 1st, 136 million versus 103. So you had slightly lighter volume. What do? Yesterday, folks, the pullback was on price, but it was so anemic, it was amazing, okay? Watch this. We came back with 111 million shares. You're going into 136 million shares. You're going into 180 million shares. You're going into 324 million shares. So you had price destruction without any volume on the way back down. Now, check this out, because this gets even better. Today, the volume is anemic. So now what you've done, you've gone to a lower low than yesterday. You've rejected price. What does it set up? Guess what? This market has game on, I suspect, to this December 18th low. And that would be 199.83 inside the SPY. If we go over and we take a look at the futures, to correlate the futures inside it, this is what you have with the futures. The price spread out in the futures today, we've already had a 34-point price spread, and the Dow have had a 264-point price spread. The low out here today was 1886. Right now, we're traded 1924. Bottom line, these babies want to get up to the 1991 level. And, you know, I still see a much larger ABC down, but the bottom line is that this market wants to go higher and really flip everyone out. And so it's a beautiful setup to get the bulls bullish, to get the bears worried, and that's the market's job, folks. Now, bonds. The bonds, no doubt, have been giving the best information, well, have been releasing the most information to the marketplace. And what we had with the bonds out here this morning was this. The 10 and the 30 year had gone to an all-time high. That all-time high was on February 11th. February 11th, the 10-year shoots up to 133.01. You closed at 132.01. You did 2.4 million contracts. That's a monster. This morning, what do you have, right, is this. Bonds come up to the lows of the highs. And depending on how long you've been listening, for some reason, markets like to do that. That's what they like to do on counter-trend moves. Bottom line, where do we go? We go to 131.25 on the 10-year. A failure at 131.21 would have been a failure. This is a monster failure. Why? Because you not only gave it up, bonds are going to go negative before we close. Right now, the 10-year is flat. So what you had is that you got over these minor swings. You had lighter volume. It's going to be just barely lighter volume, by the way. Right now at 2.2 million contracts versus the 2.46 million. So bottom line, looks to me like you are going to get it. Now, let's get over and we're going to go look at the 30-year. 30-year gave it up in spades also. So 30-year bond goes to a price point of 168.25. We are at 166.17. The low of the high is 167.22. Volume is 467,000 versus 559. That also is going to be a failure on price and volume. And we've got 45 minutes into the close. What I expect you're going to see is that it's going to be a total reversal in the bond market. The bond market was signaling that, guess what? The S&Ps, the NASDAQ, the Dow, they all want higher price. Let's go to Alex in Newton. Hey, Alex, what's going on, brother?
Hi, Tom. Welcome back.
Thanks so much, man. It's great being back.
Yeah, how was this conference?
It was fabulous. You know, we've done these over the years, folks, for, oh my God, it's years now. And we're at the Traders Expo. So picture, if I could fast forward you from 20 years back to now. So 20 years back, these were the biggest things in the world, right? There wasn't the internet around, it would just start and all that, so everyone had to go somewhere. And as you went from 20 years, and then I'd fast forward you all the way to back about 3 years ago. By 3 years ago, every one of these conferences were not only dead, they probably should have went out of business. I think the low in all, there's only one conference left, and it's the Traders Expo, basically, that and the Money Show. That could have very well went out of business a year and a half ago, too. But I could feel it a year and a half ago. I said, I think this is the low. And then last year was pretty good. This year was really good. It's a different flavor, which, it makes sense, too, because you have new traders, you have more traders coming in, and that's what it takes. And, the education, well, let's put it this way. The participation in the marketplace, if they, really work at it, is easier, not easier. There's less spreads than 20 years ago. Do you know what I mean? But Sunday was mobbed, Monday was mobbed, Tuesday there was no one there. But it was a great conference, man. Stay right there, all right, Alex?
Yeah, thanks.
Awesome, man. This is Tom O'Brien. This is TFNN, folks. Our phone number is 877-927-6648. All the markets are positive, folks. It's green. It's a green light. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. You get the Dow up 46, Nasdaq's up 33, S&Ps are up 10. We're talking with Alex from Newton. I believe we're going to be talking about the SPY, right, Alex?
Yes, but before we will talk about the SPY, I want you to take a look at TIC.
At what one?
TYCK, TIC index.
Oh, the TIC index. Okay, cool.
So 2 days ago, we had plus 1542. Today we had minus 1534. Both are extremes. And the last time we seen plus 50, more than 1500, that was on September 17th. The last we seen below 15, that was on November 12th. That's why I am concerned and I'm staying off this market at the moment, because the market doesn't give me a good sign where it wants to go. It wants to go higher, but at the same time, it has a lot of power to go lower.
So I have on January 13th, I have the minus 1581, but like today, my tick is minus 1376 in the low and plus 1304 in the high.
Mine is minus 1534, and 2 days ago mine was plus 1542, and I use TradeStation. I don't use Bloomberg.
Yeah, I have 1317, 1317 2 days ago.
It's still extreme.
Oh, we got an extreme market, yeah. Yeah.
So my thought about the market, we are coming from the bottom, big time. Especially if you will take a look at small caps and mid caps. MDY to me is the strongest at the moment, and SPY should prove this probably tomorrow. I think we will jump an ice.
Yeah, I agree. Yeah. Listen, man. You know what I've been saying. I mean, I think the SPY's going to 199, man. But I think it's an ABC down, and thus far it's acting just like one. So.
Yeah, I also think it's ABC down, but we will get this information sooner than later. It's not too far away from us.
It shouldn't be. That's correct. Right.
Yeah.
Right. Yeah.
Okay, thank you, Tom.
Have a great one, man. Have a safe one.
Bye.
Let's go to Tom in Tampa. Hey, Tom, what's going on?
Hey, Tom, how you doing?
Doing great, man. Yourself?
Doing good. Doing good. Hey, I was looking at possibly increasing my position on those 133 calls on GLD at May strike price.
Okay. I wouldn't do that until you got a nice correction.
That's what I thought. Okay.
Yeah.
Okay.
You know, so let's go through the gold market right now. So if we take a look at gold, folks, this is what you have. So in the markets today, you get a nice correlation, a rejection of higher price in the bond market, a rejection of lower price in the S&P, and a rejection of higher price in the gold market. Okay, so if we bisect and dissect gold, this is what you have. The high of today is 254. 1254. We're 1230. So you get $24 off the high. Now this is the kicker. This is what's so cool. You've done 254,000 contracts. That's going into a high. We went over the last swing high, which was February 18th, which had 182,000 contracts. So that's saying that you do have volume, you do have price. Now, when you go to a higher high and the price doesn't hold, but you have higher volume, your probability is much higher that you're going to go right back topside. Where we're going into is that we're going into the spike high from February 11th. February 11th, we went up $70 in the gold market. We went from $11.96 to $12.63. We did 366,000. So the cool thing is that we didn't get over that high. If you're a bull, which Tom's a bull, I'm a bull, a lot of people are bulls, you didn't want it to get over that high. Why? Because we would have had lighter volume. This has to build cause to get up over there, Tom. So
Okay.
I don't see this coming down dramatically, okay? But yeah, we can come back to, 1,200, 1,190, somewhere in there. They try to beat it down, the 16th of February, it just rejected it. But that's what you want to do. You do the correlation of how you went up versus how we pull back. And as long as you have pullback on that lighter volume, that's when you want to go in and get those positions upped inside the GLD and the option market.
Yeah, you don't think we're going to get back down to that 1152, 1150 before we make this run up?
Oh, we can easy, yeah. I mean, the gold's been moving $50 every day. Well,
Okay.
11, did you say 1150?
1152, yeah, 1150, 1150.
No, I don't see that.
Yeah.
No, I don't see that. It's going to be really hard for gold to break 1191. See, what happens is this. So check this out, folks. This is pretty cool. We talk about energy a lot in the marketplace. And what happened is this. We had huge energy on February 11th as it goes topside. You had huge energy to try to break it down 2 days after that. You came down with 341 million. Then what do? It turned around. You try to get down on Monday, and you only had 161 million. There's no sellers. And when you do that quick, you test it once, you test it again, it's like, oh man, it's the sellers just not there. So I just don't see a breakdown into that level. Now, if we go over, now check this out. Now, that correlation, we're going to flip this correlation around, and you take a look at the dollar index. The dollar index is a monster ABC down. So the way I'm looking at this market is that you can actually have the S&Ps go higher and the dollar index do an ABC structure down. You're going to have the S&Ps move all the way up. You're going to have the dollar index do a big ABC down, going after this $94, and right now we're at $97.50. And if you take a look at the small caps, what you had out here first today, folks, is that the small caps were the first ones that went positive. Well, the small caps, guess what? A lot of the commodity stocks, because they've got killed, so they're small caps. So that's saying to me that, guess what? The volatility is going to continue, but this baby wants higher price.
Okay.
Cooking, brother.
Thanks, Tom.
Okay, man. Have a great one. Have a safe one. Let's go over and we take a look at the some of the higher volume stocks. The volume is going to be low out here today, too, folks. What you have, of course, is that you don't have a higher high with low volume. You have a low going into higher volumes as the market had gone down dramatically before. You get Avis Rent-A-Car, it's down $7.40. That's got hit big time. Facebook is up $1.20. You have Chesapeake Energy up 46 cents. If we go over and we take a look at some of these Dow stocks, this is what's happening inside the Dow Industrials. We have Exxon up 30 cents. You have Disney up 21. GE is down 20. We'll go into the oil market. The oil market is what brought the market back too, of course. What you had out here with oil today, folks, is this. Oil goes to $30.56. Rejects lower price. Bottom line, it's at 32.24, and oil wants to run up to this 36.28 level. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. 877-927-6648. Right now, you have the Dow Industrials up 62, Nasdaq's up 39, S&Ps are up 11, and from lows to highs, folks, this is quite a day, there's no doubt. So Dow Industrials had got down to a low this morning of 16,165. Guess what? We're at 16,492 right now. Huge spread, huge price spread. If we go take a look at the futures, okay, the futures, I believe, are running at about a 40 points price spread right now. They were just at 36, but I believe we just did another bump up. So we just went from, we got 14. We did. We're at 40-point price spread from highs to lows. 1886 was there this morning. We're at 1926. And, of course, if we go over and look at those notes, the notes are giving it away when Mr. Kevin Hinks from TD Ameritrade, my son Tommy, and myself, we were on the 10 o'clock show this morning. That's what we were watching. We were watching these notes, man, because the notes, they got to 131.25. That was right at the open. They were pushing into this 131.21, which was the lows of the high volume day, folks. And the notes were the first one, and they have been for quite a while, by the way, releasing information in the marketplace. And what I mean by releasing information in the marketplace specifically is that there's an inverse correlation in between where bonds are going and the market's going. That's just how it goes. And we were actually talking about when I first started trading, bonds. Every trader would always, maybe not every trader, but just about every trader, you trade off the bond market. That's how I just learned how to trade. And bonds then, though, would only move 3 or 4 ticks, not like now. Like now, it's just amazing how bonds actually move. But the correlation is on inside that market. Now, we go and we take a look at the small caps. What you have with the small caps is this. Small caps today, if we use the IWM, got down to 98.97. We've done 31 million shares. Well, the 31 million shares, folks, we're going into 40 million shares, and we're going into 94 million shares. They destroyed the price mechanism, so you had price destruction. But that's it. There was no selling. Right now we're at 101.65, so the correlation goes like this, that you're rejecting, that the small caps are rejecting the January 20th lows, because we're at 101.62. The high of that low was $100.32. Bottom line, what does that set up? Guess what? That sets up also a run up until December 14th, the lows of December 14th, which is a monster run. That's 110.28. So you get a trader's market out here in a big way. And each and every time that you actually do come back and test the lower parts of where we are right now and have lighter volume, your probability goes much higher that, guess what? You are going to move higher versus lower first. Let's go to Jim in Minneapolis. Hey, Jim, what's going on?
Hey, Tom, how you doing? I'm fired up. I'm heading down there on Saturday morning, so we're coming down to Anna Maria for a couple of weeks.
Oh, you got to be psyched, man.
Fired up. How's the fishing? Have you been out at all?
The fishing, we got a wicked cold spell in, man.
Yeah, it looks like it.
So it'll get fired up. It'll take about a week and a half. It just turned 65, 70 like when we were in New York. But before that, it needs a week and a half. By the time you're here, man, it'll be on fire.
Yeah, I'm pumped up to
I bet you are.
To get down there. I was just laughing. You guys must be having a heyday with this Nadex platform and this volatility in these markets.
We are. There's no doubt. The oil market this morning, folks. And if you haven't test drove the Nadex product, folks, come over to our website. They'll put 25,000 paper money into your account. It's a defined risk product. And oil. Oil today. Bottom line, that rejected lower price too. And never mind the NQs. The NQs are unbelievable. The NQs today, folks. I think we're past 130 NQ points. Let me just see this for a second, because the whole market today has been just really cool. So we went from, we've done 116. Yeah, we've done 116 NQ points today. That's $20 a point per contract. So
volatility, the new normal, right?
It is. No, it is. And it will be here for a while.
Yeah, it's awesome. From the trading perspective. But
yes.
It drives the average investor nuts. I know that.
I know it's tough. It's tough, no doubt.
I was looking at this one, Tom, TRXC.
Let's take a look at it. It's a medical device company that uses flexible instruments and robotics to improve outcome of minimally invasive surgery. The low is 154. The high is 487. Okay, so
there was some. I mean, even on the news, there was some talk. J&J, might buy them up. They're talking about it. Comparing it to Intuitive Surgical when it was young, of course. Everybody wants to think they're going to get in,
Yeah, everyone wants to be Intuitive Surgical. Just so you know, folks, okay, this company here, I think, takes in all of $1 million a year, though, right?
Yeah. They're, it's. But I'd had,
Well, no, they take in $10 million. Okay, so they take in $10 million.
Yeah, so. But they had some in the low 2s and then let half of it go above 4. But wondering what your thoughts are, the way this thing has been whipping around, what sets up in your book.
Let's take a look at it. So this baby right here, you're at $3.57. Okay, so. Oh, that's good. Okay, so it's off the lows, man. I mean, if you bring this back, folks, you're going to see these different spikes. So December of 2014, it spiked to 405. June of 15, it spiked to 487, then crashed and died and went down to $1.54. But as this came off, Jim, this has a high volume spike now, 479. Yeah, that's good, man. 479. So that's saying 479 is game again, if you get volume there, it could be a small ABC up.
Cooking.
It's. Do you own it? Or you're looking to buy it?
I own half of what I used to have. I sold half when it got above 4.
Okay.
Just because of I owned it in the mid 2s, and
good for
I
you.
took a page out of your Take the Money and Run book, which I tend not to do, but.
Well, you have a consolidation. So picture this, folks. This just went from, on January 20th, the stock's at 154. On February 10th, so 10 days later, it's at 479. So it totally makes sense that you take half the bread.
Yeah.
Now, I suspect it can get back down to 282 pretty quickly before it actually gets up to that swing high, because you can see the volume is dying on the vine as it gets higher today.
Yep.
So that's saying that, hey, guess what? What happens, folks, is this. So watch the psychology behind this. This is pretty cool. Jim took the money when it got to 4, so he don't have to worry about now he's got the principal off the table. Well, the people that didn't take it, then all of a sudden it went from 479, and 7 days later it's down to 282. Now, as this creeps higher, all those people that didn't take it, that's what's stopping this from higher. So, you'll probably get another shot getting in this, man, at like 239,
I'll reload.
Yeah.
All right, I'll let you go, Tom. Thanks.
Cooking, brother.
To check him down. Take care.
Give me a buzz when you get down here.
I will.
You stay right there, folks. You'll come right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Dow right now is up 64. Get the NASDAQ up 41. S&Ps are up 11. And I do want to thank all the Tigers and Tigresses that came by booth we got to see at the Traders Expo. We had a good time up there. It was Sunday and Monday, folks. It was busy, man. There was a lot of good action. Okay, so let's go over to the SPY for a second, okay? Because if we take a look at the SPY, well, what you're going to see is this. Now, this is going to get really intriguing, and this is why. This very well could be a small ABC up inside a larger ABC down. And what we had is this. When we had come off the bottom on January 20th, when we first went topside, going up into February 1st, I thought the exact same thing, actually. We stopped pulling back. We went up in small volume. We pulled back with lighter volume. It was like, okay, wants to do it. Didn't do it, right? Turns into a complex, what would be an ABC, just turned into, the SPY went from 194.58, come back down and tested the January 20th low. That being said, this is what you have. Now, this is what's called cool. So the A point, if in fact this is an ABC up, watch this, is 181. Your B point is 194. So it's a beauty. Let's call it 195 because it's 194.98. So you're talking about a very large ABC, A to B price point. So we have, 14 bucks. You take $14 from where we are, 189. You got 199. Oh, this is even going to be better. It's 203. Okay. So my take has been that it wants to go to the lows of December 18th. Why? Because when you first get a crack in the marketplace, what equities, currencies, commodities like to do is that they go back up to the lows of the highs. And that's what the bond market did today. But anyway, that being said, this would be actually perfect because this is really deviant. So picture this. 199.83 would be where I'm figuring it's going to go. Well, the ABC structure is giving you a 203. Now, 207.79 is the last swing high. If we get, and it's going to be really easy, by the way, to get over 194.95 tomorrow. And if you get more volume than 103 million, guess what? You get a small ABC up inside a larger ABC down. And now you get a price projection. And now that price projection, which I really love, is over the price point of December 18th. And the reason that I like that is this, is that a lot of traders are looking at that price point. And what happens is that you want something that is out of the ordinary all the time. That's just kind of how the markets go. Now, if that's what we get, if we get the ABC up, you're still going to have lighter volume in the way we come down. That's the first part. So then what would be the next move after that? The next move after that, folks, would go like this. Then that would negate a large ABC down, meaning that the 8-point from December 29th down to the B of January 20th, that would negate that. Why? Because you did more than a 0.618 retracement up of that whole move down. When you do that, this is what normally happens. You come back down, then you build cause. You build cause to blow away all these lows. So it's going to be great watching how this whole thing shakes out. And what you're going to want to do is you're going to want to correlate that with the bond market, with the dollar. It looks to me that the dollar will be the next vehicle that will release a lot more information. And the way this is setting up right now, it actually looks like the market is actually going to like that dollar going down, you know. So all of that that setup is pretty cool. The dollar today got to 97.92 and just couldn't handle it. Just couldn't handle that volume. It couldn't handle that price. That's how this thing has been shaken out. So at the end of the day out here, and if you want to see, this is going to be really weird because on the NYSE, the volume is so anemic, it's unbelievable. Yesterday, we came down at 942 million shares. We've only done 769 million now, so that means a big deal. We're going to do 1 billion shares. On the NYSE, that billion shares, you take a look at it, that billion shares was going against the 15th. And when you see this, this is pretty intense. So the billion shares that we did yesterday was coming into 15th, where are you? 1.475 billion. There's no sellers, folks. So as you're coming down, on January 15th, you had a big buy as you're coming down. Well, it was coming down with 2/3 of the volume in order to break that out, break that down. It doesn't happen. Now, NASDAQ got a different little animal out here. The NASDAQ, man, the next time, for the next leg down the NASDAQ, it's going to be vicious. So the NASDAQ, yes, they did 1.7 billion. The NASDAQ's already done 1.7 billion today. That correlation, that's going to eat up to about 2 billion. Now, that also is a lot less volume than we're going into, because what the NASDAQ was going into was the January 20th volume, and January 20th was 3.2 billion shares. So you can see you've gone on into the January 20th level. You did that with dramatically lighter volume. We're going to do that with 2 billion versus like 3.2. So what does that mean? What does it take? Well, what that means, folks, is bottom line is that you're going to get the bounce first. You're going to get much higher price. Then time, building cause will start bringing it down into these lower prices once again. You get a big trading market in an extraordinary way. We go over to the ExxonMobil. What do you have with ExxonMobil today? Exxon rejected lower price, $79.67. You're at 81. Guess what? Exxon's going to go for its highs. Exxon's going for 87.43. Chevron, CVX, same type of setup in Chevron. Chevron rejected the 82 level. You're at 85.17 right now. That high volume swing out there from the November 3rd wants to go after that. That's 90. 95 is the low. 98 is the high. The numbers are pretty big out here. That's when you come down to the whole deal. That's where it shakes out. Now, if we look at the strength versus the weakness inside the market, strength out here today is United Technologies, Apple's a dog, but that's a strength today. Intel, Johnson & Johnson. The weakness inside the Dow Industrial, Boeing is down $1.46. United Health is down 124. GE is down 26 cents, and American Express is off 41. Inside the NDX 100, this is what you have. The winner is VRSK. SanDisk, that's getting taken over. That's up $3.17. Liberty Financial, Liberty Media is up 85 cents, and INCY is up 217. Taken away from it is that you actually, this is Yeah, this is interesting. You have the Liberty K shares and A shares are down. Xilinx is down. Symantec is down. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow Industrials right now are up 39. Nasdaq's up 39. S&Ps are up 8.5. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow right now is up 50 points. You get the S&P up 35. The S&P's up 10. Nasdaq's up 35. Check this story out. This is pretty cool, folks. So we're in a world of negative interest rates, right? Just coming across the tape here, Japan got paid $464 million to borrow thanks to negative rates. Japan's government has been paid 52 billion yen to borrow money since the yield on its debt first went below zero October of 2014. Let's see. So we're in 2016. While some of the bonds still pay coupons, prices on the securities are so high that the Ministry of Finance sells them for more than it costs to pay interest on the debt. Bloomberg calculations count money made on bills and notes that now have negative yields out to 5-year security. So check it out. If in Japan, you buy a 5-year security and you are paying Japan to own it. Japan follows Germany, Switzerland, Sweden in being able to get investors to pay to raise funds, a windfall that will help Prime Minister tackle the world's largest debt burden. Yeah, they're going to tackle it already. Pretty amazing. So when you check that out, folks, okay, I was on Bloomberg Radio on Monday morning, and the Carol Master, when she's interviewing me, she was talking about, we were talking about gold. We were talking about a lot of different things, but we talked about gold at one point. And, you know, she was asking me what the fundamental reason is that I thought gold was going higher. Now, in the gold market, which is cool, is that, you know, I'm a technical trader, but I know the gold market fundamentally, you know, upside down also. And the intriguing thing, what I was, you know, when I go back inside, whether I go back to 2001, 2002, the mantra on a continual basis was always the same. Why you want to own gold? Gold's at $280. Gold's not going anywhere. Doesn't pay interest. Yep. The whole ball of wax, right? Well, bottom line, we know what happened. Gold went from $252 to 1974. It goes from 1974 and implodes down to 1,074. Now, fast forward. Now we're in 2016. Well, guess what? Now what's going on across the world, there's a tax on cash. So if you have cash, you don't make money anymore. Now it's costing you money to have cash. That, just that alone, and never mind that it takes 10 tons of dirt to make 1 ounce of gold, okay? It's amazing thinking of the structure. Now, to throw a whole nother deal into it, is that when Larry Summers had come out and said that you think they should get rid of the $100 bill, he's saying that's for, you know, money laundering. That's not even close, folks. What that is all about, that's all about, so if, in fact, we go to negative rates, and I don't believe we're going to go to negative rates, but if, in fact, we did, what you would have is that the central banks can't control negative rates when there's cash in the system. They can control it when it's digital money. They can control it when there's not cash running in the system. When there's cash in the system, you can't control it. So when I'm looking at that, I'm saying to myself, well, okay, so why would you hold cash at all? Now, inside the United States, you know, you can see holding cash because you need cash to move. Think about this for a second. If we lived in Asia right now, if you lived in South America right now, bottom line, you would be not only putting your money in gold, you would have just made a fortune in gold. Why? Because what you have there is the structure of the currencies that fell so dramatically. They fell over 30%. You know, so bottom line is that you'd be richer by 30% if, in fact, you had the aspect of gold versus that paper currency. You know, and what does happen, you know, by the way, inside, if you want to know how bizarre it gets with negative rates, your mortgages, the banks would pay you on the mortgage versus you paying the banks. You'd have to pay the principal, but you don't pay interest. So the more money that you had borrowed on banks for the real estate you own, the more money you would get paid versus you paying them. How's that? You stay right there. We'll come right back.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Sean in Canada. Hey, Sean, what's going on?
Hey, Tom, how's it going, brother?
It's going great, man. How you doing?
I'm a huge fan of the show. I just found out about you guys within the last month and a half.
Okay.
And I can't believe, I'm like, where did these guys come from?
How did you find out about us?
Sometimes I'll go in the search engine and try to find some market analysis.
Okay, man. Welcome to the Tiger family. Appreciate you growling and prowling with us, man.
Yeah, man. I really appreciate you guys, and I'm just excited to watch your bids. I get a lot out of them. I really love the intros you do and the excitement and the energy, and you guys are pretty special.
Well, we get a great network, man. And there's a lot of diversity, man, and we're really lucky. Thank you so much for calling, man.
Thanks, buddy.
Thanks, Sean. Have a great one. Have a safe one.
You too, bud.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. It is better to believe than to disbelieve. And in doing so, you bring everything to the realm of possibility. Albert Einstein. Make it right! Guys, let's take a look at it out here, folks. We have the Dow Industrials up 53. NASDAQ up 39. S&P's up 14.5. You talking about reversals out here, folks? We had them in spades. I mean, big time. Gold contract up $7.60, traded at $1,230 an ounce. You get silver up a penny at $15.25. Platinum down $5 at $9.38 an ounce. Bonds. The bonds said it all, folks. The 10-year flat, 130.30. Now, the 10-year and the 30-year went into the February swing high, rejected it, had lighter volume, monster failure on price and volume. Bonds and notes, the 10-year note, 30-year bond want lower price. What does that set up? That sets up the S&P continuing higher. This S&P, I suspect, this is a B to C of a very large ABC down. You know, it very well may do a small ABC structure on the way up before it wants to come back. It's a beautiful thing, folks. It's a little trader's paradise out here. King dollar. King dollar up 5 ticks, 97.49. The euro is trading at $1.10, and the yen is trading at 111.94. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. Okay, so this is what you have. The swing point, we have 2 separate swing points. February 1st, that was our first swing at $194.55. And the SPY, 136 million shares traded. We tested that on Monday, and it failed. You know, we went to 194.95. You did 103 million shares versus 136. So what did it do yesterday? Yesterday, you had price destruction on dramatically lighter volume. We had come down yesterday, and we come down with 111 million shares. That was going into 240 million shares. It was going into 180 million shares. So what do we do today? Bottom line, you got down today. We got down to a price point of the 189. You did volume of 147 million. Guess what? You're still going into 323 million. Fast price destruction, no volume, rejection of lower price. So what do we have? Now, the market is going to have a chance to do a 14-point ABC up from the lows on the S&P, and I suspect it's going to go after it right in the morning. Why am I saying that? Well, the B point of this ABC structure on the way up, folks, is $194.95. That's nothing. That's $1.50, $1.60 from where we are. And the market only needs 103 million shares in order to do it. Now, if it takes it out in volume, guess what? That gives you a 203 price projection. The lows of the lows of where we had some volume, December 18th, is $199.83. This is where this market wants to go. It's going to be pretty cool watching this whole thing shake out tomorrow morning. Go take a look at the 3 Qs. Same setup in the 3 Qs. Rejected lower price, 99.77. Closed at 102. Your B point on the 3 Qs, $103.38. Well, that's going to be real easy to take out because we only did 23 million shares there. That would set up, that's a smaller ABC, but you still got, I'm just ballparking this right now, 95, you still got $8. $8 would bring that to 107.77, and 109 is the December 14th lows. So there's action, and there's action everywhere. Gold contract. What do we have with gold? Okay, so check it out. Jeez. Gold runs up to the highs of 1254 today. We did volume of 258,000. Now, the high that was trying to test was the spike high from 1263 from February 11th. That level there, we did 366,000. Gold had higher volume, but gave it up on price, even though it was up $7, okay? It's off $24 from its high. What does that set up? That I suspect what you're going to have is this. You're going to pull back somewhere, once again, to 1,200 mark. You'll have lighter volume. This is building cause to go blow away that swing high. That's the way that's set up right now. Bonds. Bond market. We take a look at the notes first. This is what you have with the notes. Notes got into The notes got into the swing high that was established out here on February 11th. That swing high, the low of the swing high is that 130, 121. Bottom line gets up there. We do 202.5 million contracts versus 2.4. So this is really intriguing, actually. So bonds aren't done yet. This is so cool because we tested that level with high volume. So now what this still sets up, this is crazy. So what this still sets up is that I suspect you're going to still get a pullback, but on the next downdraft, folks, inside the marketplace, these bonds are still, so picture, we're at the 10-year. We're at 130. I suspect this can pull back to like 129.08. It'll be a decent pullback. That's, what's that, 3 points. And if we have volume off that, then you get a heavier pullback. But this is also saying that bonds are still not done, which is pretty amazing. We take a look at the 30-year. What do we have with the 30-year? 30-year is set up the same way. You did 504,000 contracts. That was testing the 550,000. Yeah, so the 30-year doesn't have to test. It was rejection on price also. Bottom line, I suspect what you're going to see here, and we're going to see it more than likely tomorrow morning. The impressive thing about what the market did out here today, too, by the way, was that you had the European markets down when, in fact, our markets start rallying. King dollar is an ABC structure on the way down. King dollar couldn't handle price nor volume. Bottom line, King dollar today gets up to a price point of 97.92. You close out at 97.53. You do 27,000 contracts. That 27,000 contracts is coming against 60,000 contracts, okay? No buyers inside the dollar market. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow Industrials closed up 53. NASDAQ up 39. S&P's up 14.5. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had the Dow finish up 53. NASDAQ was up 39. S&Ps are up 14 after the close out here. Restoration Hardware just come out with numbers. Restoration Hardware closed at $51.92. That's trading down 20% at $40.71. Let's see what they're saying. So their estimate was $1.40. They made 99 cents. They got croaked. That's pretty amazing. Revenue is $647 million, and I suspect, not even getting into those numbers, more than likely the stores they're open are just too big. They just opened one in Tampa that's absolutely gorgeous, but it's like, okay, every time I go in a store or any type of real estate, I'm always looking at per square foot, what it costs and per square foot, what you can make out of it. And guess what? Man, they got to sell so much per square foot out of that store, it just blows my mind. Let's go to Mike in Raleigh. Hey, Mike, what's going on?
Hey, Tom. How are you, sir?
I'm doing great, man. Yourself?
Doing fantastic.
Cool, man.
Yeah, and so I caught your intro, and I didn't hear what you had to say about oil. I don't know if you...
I went long oil this morning before the numbers came out. I went long just for the day. I went long on the NADEX platform. And the reason I did, folks, is that to me, oil's in, hit a bottom. Number one is in a consolidation. I like how it's acting, man. The real question is going to be like, okay, how's it going to handle the 34.21? But I suspect that there's going to be a decent bounce out here, man.
Okay, and then for the XLE, so looking at that, the oil stocks, where do you see that going to?
That actually, what happened is that I like it, but what happened is that these oil stocks did come off the lows way before oil. Right. So inside the XLE, folks, Chevron and ExxonMobil, are the largest weightings there, and Exxon already went from 71 to 81, but I expect both of these, Mike, right? It's a nice setup that they both want to go to their November 3rd high. So on Exxon, that's another $7. We're at 81.52. That high is 87. Chevron, and they're both high volume spikes. That's what they are, folks. And on Chevron, you're at 85, and you're talking 98. Even if you go to the lows of those highs, with Chevron, it would be 95, okay? So if we go back to the XLE, and you take a look at this, so inside the XLE, Chevron and Exxon make up 35% of the XLE, which is a sweet little deal. That's why I like these oil stocks. I like trading oil stocks, just because it's kind of like the gold stocks. You don't have to know really a huge amount about them. They kind of move together. But so inside the XLE, your swing point is $58 and $58.52. 24 million shares. You might get that taken out tomorrow in volume, and the XLE might be a small ABC up too.
Okay, so maybe to that. About December 3rd?
No, let's figure that out. Okay, so the A point would be 52.37. The B's 58. That's good. That's $6. The C, so it'd be 61. Yeah, that'll bring you to the next swing point. That brings you up to that December 10th deal.
Okay.
And that's not a bad. See, this is set up right too, because that's on a daily. If I put this on a weekly, so on a weekly, you get a high volume spike. You're at 60. Yeah, 60. Yeah, the 58 to 60, man. If we get some decent, if you get through just the price of 58 to 60, you can get the 60. ate pretty quickly, man. You know, and
Cool.
yeah, that's the way it seems to be setting up here, man.
Cool. Hey, I just put on a trade too, a short-term one with Apple. So I think Apple looks like it wants to hit on up to. I was thinking about 115 bucks.
115. So you're going after. Let me see. So I can see the 105 pretty easy. 105 is the downdraft from the 18th.
Yeah.
Where you going with the 115? Okay, 111. Oh, I see where you're going. Okay, cool. Okay, so watch, folks. That's cool, man. I like what you're doing. Okay, so what he's done is this. The one where he's getting the 115, that was the low of December 4th, right? And that's a high volume spike there, okay? You got to get by this December 18th. So on all the markets, that December 18th downdraft there, that's going to be, you know, big resistance. You see that big volume there?
I do, yeah.
105.81. But the cool thing is, man, you're in at 96. And, you know, big deal. So if you get 105, that's cool too. You know, and what happens, folks, if you're playing, I'm not sure whether you're playing a counter trend bounce. I'm long. I'm playing a counter trend bounce myself, not in Apple, but in the market. You just have to be careful. You just have to be fast, you know?
Yes.
But I just keep your eye on the bonds, man, because the bonds failed today big time. As long as the bonds stay weak and pull back, the bonds are telling the market that, you know, the market wants to go a little bit higher. So that's the kind of that's how I'm correlating it. Let's put it that way.
Yeah, no, that makes total sense.
You know, and what happens is that what's so cool, folks, the bond market is really liquid all night long. So this is what's cool about it. You can get up in the morning, 6, 7 o'clock in the morning, and see what's happening in the bond market. So you can get a real identification of where bond prices are going versus the correlation, you know, before 7:30, 8 o'clock in the morning. So you can get a plan going. So, cooking, brother.
Cool. Have a great one.
Okay, man. Have a great one. Have a safe one. Let's go take a look at the, let's see, WSM. Okay, so what do we got here? This is Williams-Sonoma. That closed at $56.81. That's trading at $51.97. That's getting toasted and roasted also. That's getting toasted and roasted on the aspect of restoration hardware. That's how that whole thing is happening. And you know what? Bottom line, folks, as I just said about the restoration hardware. Restoration hardware, listen, go visit their stores. I think they only have 3 of these superstores. One of them they just opened in Tampa, across the country. It's incredible. But it's like, how do you pay the rent? That's all I kept going through. You know, and inside the Williams-Sonoma deal, you know, you get Pottery Barn, you get a Pottery Kids. You know, what is happening is that when you're paying big rents and you can get many of those things online and delivered to your house, big problem. There's just that just how it shakes out. Let's go take a look at Salesforce. I believe they come out with numbers. Salesforce closed at $62.52. That is trading at $67.10 right now. You know, this stock got killed too. The stock just went from $80 down to $52. It's trading up right now. Let's see what they say. Numbers. So their revenue was $1.8 billion. Their estimate was 19 cents. They made 19 cents. So they made what they were supposed to make. Hewlett Packard, HPQ, I believe that come out with numbers. Hewlett Packard closed at $10.82. That's trading at $10.86. Numbers go like this. So their estimate was $1.60. They made $1.69. Estimate for revenue is $12.2 billion. They made $12.2 billion. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're going to be coming right back. Dow Industrials closed up 53. NASDAQ up 39. S&P's up 14. We're going to be right back. Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. And folks, as you come over to our website at TFNN, you're going to see right on the front page, you'll see the Technomental Commodity Report special event. Our man, Mr. Andy Heck, he does a great show every Tuesday, Thursday, 5 to 6 Eastern Standard Time, right after I get off. Tomorrow night, from 6:30 to 7:30, he's going to do a subscriber event. Now, what the subscriber event is going to be all about is what? It's going to be about the current view of agricultural commodities in 2016. He's going to talk about the state of the market right now. He's going to talk about intercommodity spreads. He's going to be talking about how you may want to be trading these, meaning what options do you have available, what equities. Now, what Andy does is this. Commodities trade in the futures market, of course, but what has happened is that the ETF structures, there's ETFs now for just about every commodity there is out there. You know, inside of all of this, you're going to see those intercommodity spreads, and of course, what we have this year is that you have El Nino versus La Nina, and each one of those are weather phenomenons, folks, that I believe they start somewhere in Africa, you know, every few years, and then they come up the Gulf Stream. But bottom line, Andy's going to be talking about them. And if you'd like to come to this workshop and you're not a subscriber, you come over to our website at TFNN. You can test drive his report 1 month, absolutely free. You get the report number 1, which is a great report. That comes out tomorrow, free for a month. and you come to the workshop tomorrow night. Now, if you can't make it live, we get great technology. It'll be on your page for 1 full month. So check it out on the front page of TFNN. Let's go FR. Let's see what this one is. You got a lot of numbers still coming out. Pretty amazing. El Nino is off the South American Pacific. That's what the El Nino is. Thanks, Duffy. Appreciate it, man. Okay, so this is Fiesta Restaurant, FRGI. This closed at, let's see, $37. This is trading right now, same thing, trading at $37.46. So let's see what they have to say. Okay, so their earnings, the estimate was 37 cents. They made 39 cents. They beat revenue by, no, they beat earnings by 2 cents. They missed on revenue. It's always dangerous missing on revenue, folks, okay? Bottom line is that you can get the earnings per share number just about any way you want it for 1 or 2 quarters. After that, that gets dicey. The revenue number is the number that is very hard to fudge. You know, bottom line is that it's very hard to fudge. What did happen, if you were around in the 1990s, that's where the JDSUs of the world and these cable people of the world, they fudged those numbers in an incredible way, because what they were doing at that particular point is that they were actually doing barters and spiking the barter revenue, but guess what? It would be one company bartering with another company and nothing was ever getting changed, but they were spiking the numbers higher, so both companies would actually have higher revenue. And of course, we know what happened there. Stocks go from $2 to $200 back to going out of business. Pretty intense. If we go over and we take a look at the XAU, the HUI, inside the gold market, what you're going to have is this. XAU today goes to a high of $65. You're already over the swing point of 58. This baby, let me close this for a second. There we go. Okay, so we bring this back, put this on a weekly. This is right there. Oh, this will be wild watching this shakeout. So check this out, folks. This is intense, actually. So we went today to $62. And your first resistance is at $62.94. And this is where $62.94 is coming out. That was the downdraft. You know, I talk a lot about the lows of the spikes. Well, on a weekly basis and a monthly, $62.94 is the number. Put this on a monthly for a second. Same setup. Yeah, there it is, $62.94. Now, check this out, though. This is dynamite. What day is it? So today's the 23rd, 24th. Thus far, we've done... Oh, this is awesome. So for all you bulls out there, you're going to like this. So check this out. We're going into 997 million shares in the XAU. As of yesterday, we did 869 million. That's saying that we're going to do higher volume than we're coming into. And that's what it takes, folks, in order to break the higher price. This is a correlation that you actually have more buying than we had where the supply line is. So that's the XAU. Now, we'll go to the HUI, and I suspect the HUI is going to be much stronger. The reason being is that the HUI has been stronger right from the bottom, and the HUI is all about not being leveraged more than 2 years out. So the HUI, same week, we had 675 million, same month rather, 675 million shares, and we're 503. Ooh, that's interesting. So this gets wild, because the HUI, we have the price, but we need more volume on the HUI. Yeah, you need more volume. We're already through the lows of it, though. We're through with 150. The highs are at 179. But we do need more volume on that HUI. That's how that's set up. Let's go take a look at the GLD. So we have inside the GLD today. GLD does 17 million shares. We put that on a weekly basis. And what you're going to see, the GLD is building cause to get up and over this 120.84 level. That was the level that we hit the week of December 12th. And we do not want this to get taken out this week, that's for sure, because you're not going to have the volume. Thus far, this week we've done 37 million, and you can see it's going to take quite a bit to do 125 million. Yeah, that's just the way this baby is set up. Let's go over and take a look at the silver market. So we had with silver, SIH. What we have with silver out here, silver hit a high out here today of $15.59. Gave it up on price, but guess what? Sweet volume. We did 80,000 contracts. Last time we were up here, we did 93,000. Again, when you get up higher, you have the volume, gives it up on price, you pull back, but guess what? You're right back topside. So silver, and silver is still the laggard. The silver equities no longer are the laggards, though. The silver equities have taken swing points out, have done it on volume, all of the above. Physical silver itself is still building cars to get into the October swing highs, which are generated out there at $16.15. That's the way that seems to be shaking and baking in a big way. We take a look at the there she is. Okay, so we go into the diamonds. You know, the diamonds, of course, are the ETF structure for the Dow Industrials. What you want to watch out here tomorrow is that how you attack this 165.13 number. If you get volume, it's going to be easy to get volume of 4 million. You get volume of 4 million, guess what? You get an ABC up. Big, wide price spreads, folks, in this market. Large price spreads, whether you're a bull or a bear. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow finished up 53. NASDAQ up 39. S&P's up 16. We're going to be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. 877-927-6648. We had 3M up $1. You had Amazon up $1.10. Johnson & Johnson was up 86 cents. You had DuPont up 19. Walmart was up 64. United Technologies up $2. If we go over and take a look at the financials, we'll start with J.P. Morgan. J.P. Morgan, folks, did come off the lows. They rejected $54.32. You are at 56. This baby is still weak. And this is what the difference is. This is pretty cool. So, and we'll go through a few more financials, but I suspect that's what you have with the financials. Yesterday, you know, so the S&P, the Dow, the NASDAQ, the ETF structures, they all had fast price destruction yesterday, fast price destruction this morning. Yesterday, they were all on dramatically lighter volume. J.P. Morgan, no. J.P. Morgan came down yesterday, and it closed the prior day at $58.57. It goes down to $55.96 yesterday with expanded volume. Now, so what that sets up, that's telling us that, guess what? J.P. Morgan wants lower price. Today, what do? You get down to $54.32, you reject lower price, have lighter volume. Then what are you going into? Because we were going into the highs of the lows. That had 44 million. That sets up another bounce. That also sets up, though, you can see the difference in the correlation of how the financials came down versus the market came down. So the financials, more than likely, will lead us down. That's J.P. Morgan. Let's go take a look at Bank of America. We take a look at Bank of America, BAC, Bank of America. Oh, it's going to be, okay, this is good. There's some divergence. Bank of America didn't come down with volume yesterday. Bank of America came down with 104 million, but guess what? This is crazy. It came down with volume today. It did 159 million. So Bank of America is also saying, guess what? You get an expansion of volume. You can have a bounce. That also wants lower price. We go to Goldman Sachs. We take a look at Goldman Sachs. Goldman Sachs actually come into its low, did reject lower price, had lighter volume. That being said, you know, you talk about an equity getting killed. Goldman just last 3 months went from $199 down to $139. And so Goldman also more than likely you're going to see a counter trend bounce. You put them all together, though, bottom line, these financials still want lower price. Morgan Stanley, same setup. Morgan Stanley went to a lower low today, higher volume. Morgan Stanley has just gone from $35 down to 21. We take a look at a few of these and put these on a monthly basis, and what you're going to see, 22. This ain't bad. This is what you have on a monthly basis. Now, on a monthly basis, what Morgan Stanley's done is it's coming into a high. This could be a good bounce, man. So Morgan Stanley rejected $22.81. Yeah, it did. It went to $21.15. It rejected that. So now it's going to try to make it up to $30. Yeah, this can make it. Yeah, $30.15. That's quite a move, actually. So the volatility is going to, I suspect, not only be here, you know, it's going to be here for quite a while. We go back over just that oil market for a second. So what you're going to be looking for in oil tomorrow morning, folks, is this. Oil came down to $30.56. And what has happened is that where oil is going, the market's going on these counter trend bounce. That's how it's been moving. Oil, the oil numbers came out today at 10:30 in the morning. Guess when the market moved? 10:30 in the morning. So we're at $32.34. First swing point up here is $34.21. Your next swing point is $36.28. If you get volume behind this move, then you're going to really get some decent action. Because it looks to me like oil actually wants to get up to about $38.59. That's ICE. That's where it's set up. That would be a normal bounce, and that would be a pure dead cat bounce, folks. Okay, because what you have here is that just a 0.382 bounce. Well, there it is. That's a 0.382 bounce of how we come down. You know, this leg down started October 9th. October 9th, oil was at $53. It goes down to 28. So a 0.382 bounce is $38. Yeah, that's a normal occurrence in a market that has got smoked so dramatically. That's just how it works. We go over, it looks like Restoration Hardware is off 24% now, man. Mr. Dave White's telling us. That closed at 51.92. Well, here, let's look at it anyway, because this is a monster ABC down anyway. This is an equity that already got killed. This equity already went down 50% in 4 months. It started at $106 in November, made a low a week and a half ago at $45. Now what you're going to see is that it's going to break an ABC structure on the way down. The A point on this is 65. So it's $20. So $35 is game on this. Let's go see what $35 is at. 35. This is crazy. This is going right back to, let's see, let me see, I can do 10 years. So $35 is your price projection. And it looks like that it's going right back to where they must have spun this off again or something. Let me look at this for a second. It looks like they spun it off again. Yeah, so it came out on November 1st of 2012 at $24. It's going right back to where it started from. So it was $24. It spiked up that day. You can imagine the folks that bought the secondaries out there, because there was a secondary that was done May of 2014. No, May 14th of 2013 at $50. There was another one in July at $70. Could you imagine you get something at $70 and within 2 years it's trading at $40? Pretty sick. Here, let me show you something, KGC. I want to show you something that you got to be prepared for inside the gold market too. And this is what it is. Kenross Gold. Okay, we don't own this. I don't even follow this anymore. Bottom line, Kenross Gold trading at $3.18. Kenross Gold just came off the bottom as the rest of these equities also come off the bottom, and it went up about 90%. So January 19th, it's trading at $1.31. Today, it went to a high of $3.36. After the market, guess what? They're doing a secondary. And you're going to see more of this, okay? Kenross they sold 83 million shares at $3 a piece. It's trading at $3 a piece. So that you're going to see the quick pullback on Kenross. And what I do expect you're going to see is more secondaries inside that market. Now, in Kenross' situation, they always needed cash because they spent so much money in Russia on these mines. It's $250 million. I believe there's always optionality in these. Let's just see what the optionality is. And what I mean by that is that the broker-dealer that sells it on a bought deal, they always give them an option to buy more within a certain amount of time. Okay, so they sold 83 million shares. Yeah, here it is. So they got, the broker-dealer has an additional 30 days to sell 15% more of it. That's more dilution. You stay right there, folks. We'll come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Let's go over to L Brands. This is a Victoria's Secret. That closed at, that's one of their brands. That closed at $83.19. This is trading out right now at $80.60. This has also been on a one-way trip on the way down. This equity, when you take a look at it, was trading, I believe, about 96. Yeah, it was trading at $98 2 months ago. Goes straight down to the $77. And we'll see if, in fact, that lower price point is going to hold. Numbers go like this. Their net sales, man, that's big. Wow, holy cow, they're huge. $4.4 billion in net sales in 90 days. Their earnings per share was $2.15. Big number, man. So the expected revenue was $4.37 billion, and they did $4.39 billion. So they did a little more than that. Where they see the first quarter coming out, this is where they're getting smoked here. They had expected earnings per share of 65 cents. They're going to do 50 to 55. Big number, man. That's a huge number. Preliminary sales, the bottom line they expect to be, the top line they expect to be the same, actually, 4.4. Big number. It's absolutely a big number. Earnings per share. So bottom line is that if you take a look at that equity, the way that equity is set up right now, is number one, it looks like it closed at 83 bucks. You're trading right now at 80. See down, it's not the end of the world because it has a high spike low at 77. That's on the daily, so that wants to get tested. We put this, yeah, you put this on a monthly though, guess what? You put this on a monthly, this thing is building cause for much lower price. So this was on a one-way trip. 2009, the stock's at $4. 2000 and look at that, what a rocket ship. November It goes from $4, folks, to $98. That is a rocket ship. Wow, that's pretty intense. Okay, that being said, guess what? We come off the high. It goes from $94 to $77 just this month. Just this month. It looks to me, on a longer-term basis, your next stop is 45. Some of these things are a mess. You know what has happened is that there are so many equities that went topside in an incredible way, had no volume, and once you start going down, you know, it's like that whole elevator down, folks. There's no stops on the way down. You know, we're going to get, my take is we're still getting a nice counter-trend bounce in this marketplace. Individual equities, put your stops in everywhere, folks, okay? Just don't take the heat all the way down, because depending on what you own, some of these individual equities are absolutely going to just get toasted and roasted because it was a one-way trade, and we're not in a one-way trade anymore. You know, if we go over and you do take a look at the, well, actually, let's go to the UK markets, because what we had out here today is this. The UK and the DAX, they held lows because our markets didn't start rallying until 10:30, really got going about 11:30. That's when the markets closed in Europe. So if we take a look at the UK first, what you're going to see is that I won't get the volume till later, but the UK came down 95 bucks. You're still coming into high volume spikes. So UK wants higher price tomorrow. It's going to, you know, would likely go after the swing high, which is up about another $200. The DAX in Germany, which was one of the weakest indices out there, that was down $248 of 2.4%. That was on dramatically lighter volume. So that DAX also does want higher price. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night, safe night. Remember, right here, 8 o'clock tomorrow, live programming right on your cell phone, TFNN.com. Go get them, folks.